morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Well, good morning. Welcome back to Insurance Matchmaking. Hopefully everybody has survived the snowmageddon and got their heat and power back on. I know Nashville's still having a lot of issues when it comes to power. I'm not sure. I honestly haven't followed it maybe as close as I should have, but they really have had it worse than us. And I think some of the issue there is just the population density of getting worse weather than we got here, and then the population density and all those houses with trees down and power out has been a mess. So our thoughts and prayers are with those folks in Nashville, Clarksville area. My daughter's in Clarksville. They've had it a little worse than we have, but her house, they're doing fine. She's been going to work. I guess the kids are in school now. But yeah, it's winter, folks. Coming up, we're getting close to Valentine's Day, if that's something that you like to celebrate and spend a lot of your money on. And I try to avoid the stuff, or maybe go out to eat the day after Thanksgiving, or buy flowers or chocolates when they're marked down to half price now because they didn't sell them for Valentine's. So, yeah, I'm a what do they call that? Skinflint. So anyway, a couple things I wanted to go over, things I've touched on. Obviously in the past, it's kind of hard to keep coming up with original material to entertain you with. I attended a training yesterday, a video training, and it was talking about a product that I generally have been mentioning on here, but there was a couple approaches to it, a couple scenarios that were laid out, and I was wowed. You've maybe heard me mention the Affordable Choice Plan. I'm going to use the name of the plan. I'm not going to mention the name of the company here. Obviously, you can call me and I can tell you what company it is, but I'm always a little cautious about mentioning company names on the show, because if I say something wrong and somebody reports it to them, they get mad at me, and then they take away my contract and I can't represent them. Which, generally though, if you're as long as you're being fairly accurate in presenting their product correctly, they're going to be okay. But when you start using other companies' names, it's like you have to have their permission, or they're going to charge you for using their name. It's kind of like, if they play certain songs on the radio, you got to pay royalties on them. So I do definitely try to avoid using those company names. But I've looked at the Affordable Choice Plan as an alternative to the marketplace. It is a fixed indemnity plan, so it is going to pay a certain amount for certain things, whether it's a day in the hospital or a doctor visit or a surgery, some other things in there that'll come into play. Depending on which level you have, it will pay on prescriptions, and it has some add-on features in there also, helping you find where you can get the prescription for the least cost, and also the same thing with the medical service. Like maybe you need to get an ultrasound or an MRI. You can use this tool. It's not the word I want to say, but use their service and locate where it will cost you the least, because you're able to go in and negotiate a cash pay. Because it's not insurance in the sense of like your major medical, whether it's your Affordable Choice, Affordable Care Act plan, or your workplace employer-sponsored plan that is what they call major medical or a qualified health plan. You can negotiate cash, or even just negotiate to the Medicare rate. And basically, that's kind of the way this plan is designed to reimburse. I learned something yesterday because I didn't understand when I'm looking at the brochure. And like I said, I've been marketing this plan for a while, and this is one thing I wasn't really sure on. It talked about on the top level of the plan, it'll pay 3 times the surgery schedule. Well, I didn't know what they meant by the surgery schedule. I actually found that out yesterday, and what they're talking about was the Medicare schedule. You've heard me talk about, if you've listened to my show for a while, you've heard me talk about Medicare assignment, which comes into play on some of those plans that, on Medicare, you can have excess charges if the provider is not fully connected with Medicare to accept what the Medicare assigned rate. So Medicare has an assigned rate for a surgery, and this plan, like I said, on the top level, will pay 3 times the surgery schedule. That means it will pay 3 times the Medicare rate for that surgery. And the reason I bring that up is, like I said, you can negotiate as a cash pay, and you still get reimbursed by the Affordable Choice Plan for that surgery. Now, you can assign it to the provider, so it will work. In a lot of ways, it'll work like regular health insurance and pay that in just like, with dental plans. You don't necessarily, the dentists aren't always in network, but they will take the plan, they'll take your insurance, and there may be some balance billing, but generally it's going to cover it. And so that's one of the things there. Like I said, I learned, now I understand when they're talking about the schedule of benefits or the surgery schedule payout. That's why they don't set a fixed amount, because that rate changes. As we have inflation, Medicare will raise those rates, and so the brochure doesn't have to be changed. One of the other things that came up yesterday, that there was recent price increase with the plan, and it worked out to be about $1 per member was the increase. And it was only instituted on those that are new to the plan. So the plan, once you get it, it is guaranteed renewable. And so you have that plan until you reach the age of 65. At 65, because you go on Medicare, you really don't need that plan anymore. It's really designed to go with your whatever under 65 insurance you have. But one of the things, and I didn't look at it that way before, but I've kind of encouraged people to take a high-deductible health plan, because I've always felt that, hey, you still kind of need something to cover that max out-of-pocket if something really catastrophic happens, or very catastrophic sickness or an injury that keeps you in the hospital for months. Then you could run out of benefit. The interesting thing was, and like I said, in this training that I attended, was a lot of people will still qualify for a zero premium plan with the marketplace based on their income if they go with the bronze, but you can have that high deductible, that high max out of pocket. And I've always encouraged people, when they're doing the bronze plan, is to add some supplemental coverage to help cover those out-of-pocket costs. And the one thing I found very interesting, didn't really think about it, but like a lot of people maybe had silver and gold plans. They maybe had subsidy with the enhanced subsidies, and so those plans were still fairly affordable. And because they are over that 400% cap, they no longer qualify for subsidies on those plans, but they still want to go with a marketplace plan. So they end up going to a bronze plan but they're still paying the premium. They're still paying, say $1,000 a month or $1,200 or $1,400 a month for that bronze plan. And so you go to the hospital, you have a major surgery. Then there was the example, and I don't have the example right in front of me, so I'm not going to be exact on it, but it's going to be a little bit different for each person based on, what your rates are too. But the example they gave was an individual that, and it was like 7 days in the hospital, had $31,000 worth of medical bills, and but that person had a bronze health plan that has and the example it was given was a $9,100 maximum out of pocket, and it was like $1,100, so it was like $13,000, $14,000. I can't remember the price I gave, but basically, if you added the deductible, or the max out of pocket, I should say, I don't know why I said deductible, but like I said, in this example, it was a $9,100 maximum out of pocket, and then you add the monthly premiums that the person was paying. Oh, that's what it was. But basically, they ended up spending $23,000 for their health care and the maximum out of pocket. And however that worked, I know I'm doing the math wrong, but it basically worked out if the insurance company really didn't pay anything for that hospitalization, or next to nothing, because between what the person paid in their premium and their max out of pocket, they paid, way over most of the cost versus, and that came into play was with the Affordable Choice Plan. The example, and I think it was coupled with also the hospital indemnity plan that just paid $10,000 just for being in the hospital, which that $10,000 covers the plan. And the example that was given, of course, in this case was showing, hey, if you paid $8,000 for the supplemental coverage, it covered the out of pocket plus it paid, and so the person that actually had that coverage actually came out ahead, actually ended up with $10,000 or $20,000 in their pocket because of the way the plan paid out. So I'd love to have the opportunity to sit down with you and go over these options and see if they might work for you, or maybe you took that, as they say, bit the bullet and said, you know what, I think I probably should get this marketplace plan just to play it safe, but you're spending several $1,000s for a plan you're not even really using. We have other plans, and again, it has to do if you're healthy enough. Now, one of the things and I talked about this, I think, last week or the week before, about the Affordable Choice Plan is you don't have to be in perfect health. I did have somebody get turned down for the plan, and I'm trying to think, there's maybe 2 people I've had apply for the plan that were declined because of recent health issues or a long-term issue. But being diabetic, type 2 diabetic, isn't necessarily a knockout. Having high blood pressure or high cholesterol aren't a knockout for this plan. Now, if those conditions are uncontrolled, then you will be turned down. Height and weight can still be a factor and again, related to other health conditions depending on your prescription. If you have no prescriptions, as the life insurance commercial you hear sometimes on the radio, and you're a little portly, you still probably could qualify for this plan. So it comes in handy. Like I said, it pays so much for a doctor visit. It pays so much for surgery. It'll pay so much for being hospitalized, and then so much per day. This plan does have a little bit of a cancer benefit to it. I still recommend that if you're looking at cancer coverage, you still maybe have a little bit more. I'd love to put a package, I guess. That was the one thing the trainer she mentioned. She called them POP, plans of protection, I think is what and that's what we're trying to do. We're trying to protect your out-of-pocket costs, make sure that you are not getting stuck with a big bill going into bankruptcy because you didn't have insurance. I learned that kind of when I started with Aflac was, hey, it's not the health insurance, it's not what the insurance covers is not what puts people in bankruptcy. It's that they're not working anymore, or they're working, they had to take time off from their job, or they lost their job because they were sick or injured, and now they got to try to find a new job, plus pay all these bills that piled up. And the bills that piled up weren't just the medical bills. It was the rent. It was the car payment. It was the car insurance. It was the electric bill. All those things were piling up because you didn't have a paycheck coming in. So that's one of the things we want to protect your paycheck. I have short-term disability plans that can help with that. And we also have, like I said, those supplemental plans that will reimburse for that catastrophic event. And they're very inexpensive. Even if you're like in your 50s, in early 60s, not on Medicare yet. We've got plans that are designed for those on Medicare too. But looks like we're up on the break here, and I'm going to go over some of this after the break.
Dreams made real. It's more than a slogan, it's a mission. Join Upper Cumberland Habitat for Humanity for the first ever White County Dream Builders Luncheon on February the 10th from 12 to 1 p.m. at Life Church in Sparta. Be part of a powerful hour that supports affordable housing right here in the Upper Cumberland. General admission is just $20, or elevate your impact as a $250 table host. Scan the QR code on our social pages to purchase tickets. The White County Dream Builders Luncheon, February the 10th at Life Church in Sparta.
Hi, this is James Green, your local Twin Lakes security consultant. When you lock up at night, do you wonder how safe your business really is? We can help take the worry away with the latest security technology, including video surveillance, fire monitoring, remote access, and more. And while we protect hundreds of businesses in the Upper Cumberland, we also offer custom solutions that fit your unique situation, all backed by a local friendly service team. Contact us today for a free, no-obligation review. Twin Lakes, security made simple.
Twin Lakes Security, TN Cert C-0026.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, welcome back to Insurance Matchmaking. One of the things I wanted to touch base on, I realize that before I get too far into, I want people to we are resuming our Welcome to Medicare, the Medicare 101 seminars. unfortunately, I think I may have mentioned last week, the library is going to be doing some construction, so I was not able to get that site. Do have some good news. I have found another site, but we are still going to be doing some at my office. And one of the things I started last year was whatever day that I would have a workshop scheduled, whether it would be at the Cookeville Library or the Cumberland Business Incubator or Millard Oakley Library in Livingston. I do try to get out to some of the other communities to do some of these workshops. But those would always be in the evening, always 6 o'clock. I try to keep it consistent. So if you're not sure what time I'm doing it, it's 6 p.m. So it doesn't matter what location is. 6 p.m. is when it starts, and we start promptly at 6 o'clock. I know sometimes we'll have people who'll show up early, and they're kind of thinking it's kind of like you go to the doctor's office. Hey, I show up early, maybe they'll start early. I said, no, I have to wait to 6 to get started, just because people could file a complaint on me if I started before they got there and they were on time. But I do start promptly at 6. I know people, once they get there, they want to have the thing get started and have it over with. They want to get back home. And I try to keep it not too boring. But anyway, so those days that I would have that evening workshop, I do offer a session at 2 o'clock at my office. I've had a few people that have come in then because they just couldn't make one of the other times. But then again, those were usually with prior coordination. They didn't. I haven't had anybody just kind of show up at 2 o'clock. It was one of those. Oh, I just can't make it Tuesday night. I said, well, if you can come Tuesday afternoon at 2, or I scheduled it another day and just did it at the office. So we try to, and I always want to put everybody at ease on this. It is not a sales event. It's Medicare is very strict on that. They put in some rules this last year that I think they went a little overboard, that they tell us we can't even book an appointment or fill out the form. It's called a scope of appointment form that we have to have 48 hours prior to an appointment, saying you're giving us permission to do a sales presentation with you. So CMS is very strict on that. Of course, I always have to be cautious that, hey, I could have a secret shopper show up and just want to see if I am doing it compliant, and if I'm not, they want to file. And I'm sure there could be other agents or people that work at SHIP may think I'm unscrupulous and decide they want to see if I really am above board with this. So we very much stay to the script that it is educational, but explaining, what's the difference between, Medicare A, B, C, and D, and we go into all that. So even if it's at my office, there's no sales presentation. We may give you brochures or something, but we're not going to twist your arm. We're not going to say, okay, sit down here and let me sell you something. It's not the way it is. It is you are under no obligation to do business with us, but we do hope that you do. Obviously, if you're listening to me on the radio, hopefully that you decide, hey, sounds like he knows what he's talking about. Let me go see if I can get answers to my questions and figure out what's right for me or my family. So please spread the word. But anyway, new location at the Gables Apartments there on Veterans, right across from the fairgrounds. They have a really nice, what they call their clubhouses, where their office is next to the pool. You pull right in. There's plenty of parking. It's a really nice room. And so on the 19th, and it's actually the 19th this month and next month. That's one thing I like about February being only 28 days. If you look at the calendar and it's the date and the day of the week. In February, it will be the same day of the week, March. So Thursday, February 19th and March 19th, I will be doing a workshop at the Gables. And that might become a permanent location. I kind of like it a little bit better than the library. Of course, I have to pay rent there where I didn't at the library. So, but it's not that much. So it's something that it may be a ongoing event site. And I may do other events there also, not just necessarily Medicare. We may talk about some of these plans you've heard me talk about on the radio, or other seminars about Medicare that aren't, hey, you're new to Medicare, come to this. Maybe you've got other questions about things going on with your Medicare. But so we'll be doing that. I'm trying to think. I realized I went on the break and I wanted to make sure and we are doing on February 10th. So I will be doing a 2 o'clock and a 6 o'clock at my office on Tuesday, February 10th. March 10th, I am not doing a workshop. I am doing on the 12th, I believe it is, which will be that Thursday at Cumberland Business Incubator. So there will be a March session in Crossville. So if you're listening and that Crossville will work a little better for you, we will be doing that location. So hopefully get those going off, getting those going, getting those launched, and hopefully the weather will cooperate. I'm hoping the worst weather is past us, but we still have time to get a couple of snow or two in between now and the end of March. But hopefully it won't be what we had here last week. So I was talking about an affordable choice plan and those supplemental plans that will fill those gaps of your health. Oh, and I mentioned, that's what I forgot to say. I have one short-term medical plan that has a $25,000 deductible. People look at it, well, what are you kidding me? I'm never going to pay, But that's where you have the insurance, so you have that protection against that super catastrophic event that the fixed benefit plan is not going to cover all your costs. The other thing is, the good news is that plan will help you get through that. But maybe if you do need more coverage, that next open enrollment period, you can get a marketplace plan. You're going to pay more for it, but you may need that higher cost plan for ongoing care. Doesn't mean you have to quit the affordable choice plan. It's guaranteed renewable, so even if something catastrophic happens while you're on the plan, it's still the benefits reset each year, so you may still be able to use those benefits along with the marketplace plan. But I mentioned that short-term medical plan. Most people usually go for the $10,000 deductible. I've got a couple people that have said, yeah, it makes sense, do the $25,000 deductible, and then have another plan that pays for your routine doctor care. And you're spending less with those two plans than you would with a plan with a lower deductible, and you still have the deductible. So, and if you don't get the plan to help you with the out-of-pocket costs, you're paying for everything out-of-pocket with some of these plans. Some of them, they're just a high deductible. There's no co-pays. You're just going to pay as you go to the doctor. You just have catastrophic insurance. And if you're doing it just for catastrophic, the highest deductible really is going to be in your best interest economically if you supplement it with a plan that will pay for that catastrophic event. That will cost less than having the plan that has the lower deductible when you add up the monthly premiums for the separate plans. And the other thing is, I mentioned affordable choice plan is a little easier on the underwriting, that you can have some health conditions. The short-term plans, if you're taking any type of diabetes medicine, they're going to turn you down. So basically, if you can get approved for a short-term plan with a super high deductible, you still can get the affordable choice plan. So maybe you don't want the what's called the Elite Plus. There's 4 levels of that affordable choice plan. Maybe you just want what they call the Classic. So there's Classic and Elite, and then both of those levels have a Plus level. So the Classic is not going to pay, it's not going to reimburse as much. I think maybe it doesn't cover prescriptions. Again, I have to read. There's a couple things that it just is definitely not as generous as the Elite levels on that. So that's one way to do that. The other thing, there was some stats I wanted to share that I picked up yesterday also, and it was talking about the likelihood of people filing claims on types of insurance. Now, here's the surprising part. And I fall into this percentage, but it says 0.04% are likely to file a homeowner's claim. 0.06% are likely to file an auto policy claim. Those that get a cancer plan have a 40% likelihood of filing a claim. Long-term care goes up to 70%. And dental says 100%, which I kind of think that, I guess that's kind of a rounding. But generally, pretty much people, if they get dental insurance, they use it. And then say filing a claim is if that dental insurance is paying for your twice annual exam and cleaning, that's a claim on the insurance. So I know there's some people may take out a dental plan and never go to the dentist. But I guess they're kind of figuring, well, some people file more than one claim. So there's 100% likelihood of filing that claim on a dental plan, and then a final expense life insurance plan are 100% likely to file a claim, because there's an amazing statistic I learned the other day that 1 out of 1 people die. I know I've been kind of making a little joke there. Sorry, folks, but, insurance humor. That's one of the reasons why, they are a little bit more expensive. They are whole life plans. They're not hugely expensive, but they work very well for especially people who've maybe waited until they realize, start realizing, hey, I am not immortal. I'm going to pass away. I'm going to have big expenses, and I don't want my spouse to have that big expense. I don't want my kids to have a big expense. And so take a $10,000, $15,000, $20,000, $25,000 life insurance policy out. And like I said, they can be a little expensive, but you never lose the money that you paid in. And literally never lose money. Even if you don't file the death claim, I say don't file the some people that are in poor health get what's called a graded or a guaranteed issue plan, and they won't pay 100% of the death benefit out if you pass away in the first 2 years due to something like a heart attack. If that's the case, and they don't pay a death claim, but they'll refund the premium. They refund the premium plus interest. So I say you do not lose money on a final expense plan. You'll never pay more for that plan than what the death benefit will pay out. So if you hit that, the way they do the tables on that is the cash value of the plan. You pay into it, and what you've paid in equals the cash value at age 120. And not too many people that are living to 120 years. So if you get the policy at 60, you're apt to, you might live to 90, 95, so there could be 30 years you're paying in on that plan. Well, you're going to get, your survivors are still going to get a settlement higher than what you paid for the plan. So I know some people say, well, what if I just put money in the bank and save it and have that? Well, yeah, but what happens if you pass away 6 months from now? You didn't save $10,000 putting $50 a month in the bank account, versus if you paid $50 for a $10,000 life insurance policy and something happened, you died after 6 months, and you weren't on a graded or guaranteed issue plan, it's going to pay out that $10,000. In 6 months, you paid $600. So I can't use the term investment, but it is a great value for the low amount that you're spending. So that's something we can help you with at our office. So remember, as we've said at Matt Libby Insurance, we can cover you head to toe. It doesn't have to cost you an arm and a leg. Please continue listening to us here on Insurance Matchmaking. Please go to my YouTube page and subscribe and like and follow those pages and share them. That's how it helps me get the word out. So, and you can go to insurancematchmaking.com and find those links.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.